Hi, this is Matt from Speak Straight Mortgage. This video is about the components of a mortgage payment. I found people learn best by doing, so I created a downloadable worksheet so you can follow along and we can determine the actual costs of properties as you're surfing online so we can have a real world application of these components. So let's get to it. What I'm trying to change is give you actual worksheets to practice this so you can compare the cost of one house to another. And that's kind of the point of learning the components of a mortgage payment, because 95% of all the buyers don't understand the components of a mortgage payment. So instead, they just look at the purchase price and assume the lowest purchase price is going to have the lowest monthly payment, and that is almost never the case. And I'm going to get into why. So first, let's go over the components. So there's principal and interest, which factors in loan amount, interest rate, and how long the loan is. Next is property tax. Property tax is not the same on two properties at the same price in most cases, especially in Denver. For example, if this house is new construction, it could be triple the cost of a house that's existing. So accurately factoring in property tax is important if you're looking for the best deal. I'm going to show you how to do that. Homeowners insurance, otherwise known as hazard insurance. I'm having it currently on this first worksheet, and in each video I'm going to give you a little bit more information to build on the next. At this point, I'm just auto-calculating what I think about a insurance policy would be on a single-family house. I'll make a separate worksheet for townhouses and condos because the insurance required is significantly less. Okay, next is HOA. Not all houses have HOA. If they do, I'll show you where to find it and how it influences monthly payment. Lastly, monthly mortgage insurance. Mortgage insurance is what you pay for not putting 20% down, and it varies by loan type. Okay, so now that's an overview of the components. We're going to take this and put it in action on calculating the actual monthly payment on a real property. So I pulled up this Zillow listing because I can easily show you where these things are to input into the worksheet. So in this case, we're taking this house 790 Wolf Court. It's listed at $485,000. So if we go to our worksheet, just put in $485,000 in purchase price. Okay, now loan amount, I'm putting $450,000. In further worksheets, we're going to go more in detail about what you have to put down based on loan type. But at this point, we're just looking for a main idea of how loan amount and interest rate and term affect the payment. So in this case, I put $450,000. Okay, for interest rate, to find a rough idea of what interest rate is, you can Google mortgage rates and look what they say. On our website, we also give live rates at speakstraightmortgage.com. So as an example, when you put in, let's see, on the main page, here's a price where you put in the purchase price, you put in the loan amount, you put in credit score, you hit get rates. And we'll go into more detail of what all these other columns are, but for this point, basically it's showing you can get a bunch of different rates, but they cost different amounts. I'm not going to get into that yet, but just look at the rate here on this column to get a rough idea. And there's different types of loans. In this case, it's listing conventional first, FHA second, VA third, etc. But that's another spot where you can get rates. As we learn more, I'll show you how to use this tool to actually calculate specific cost of the rate. But for now, we're using 6.99 rate. The term, most mortgages are 30 years. You can get them less. You can get 15-year mortgages, you can get 10-year mortgages, you can get 20-year mortgages, but for the most part, the vast majority of people get 30-year terms, so that's why that's at 30. Okay, so now we've entered these things, it's going to auto-calculate principal and interest. That's the main part of the mortgage payment, but it is not the only part. And that's this. The point of this video is you really need to understand the other parts if you are looking for the best value and seeing the true cost of one property against the next. Okay, next is property tax. So on a Zillow listing, scroll down until you hit, first there's price history, then public tax history. It's going to have year 2023, so it's 2432. So we're going to put that in the box, annual property tax. I made these worksheets so you only enter stuff in green boxes. You don't enter anything, everything else is auto calculated. So 2432 I've already entered, it's showing $203 a month. Homeowners insurance, I'm having auto calculated on this worksheet. It is an estimate. And this worksheet is for single family houses. I'll make another one for townhouses because the insurance cost is significantly less on a townhouse and condo if the insurance is covered, if the HOA's insurance is covered in the structure, which happens in a lot of cases. Okay, HOA, Homeowners Association. Not all houses have a homeowners association. On Zillow, this should be listed right here at the very top. You can see there's nothing here, so I'm using 0. Okay, next, monthly mortgage insurance. Like I said before, when you don't put 20% down, different loan types charge you different amounts for monthly mortgage insurance. For FHA loans, the range isn't very much. USDA loans are the same. VA loans are the same. There is no mortgage insurance. But conventional, there is a huge range. Like you can see on here, from 0, if you put 20% down, you wouldn't charge anything, to $458. And that depends greatly on credit score. Credit score is by far the most important factor for mortgage insurance on a conventional loan. It doesn't make as big of a difference in other loan types affecting price. On mortgage insurance, it doesn't make any difference on the loan types what your credit score is. But on a conventional loan, credit score makes an enormous impact. And I'll get into this in far more detail in further videos, and that is why it's important to understand the other components, because it is not just interest rates. P&I is only one portion of the loan. But now that we have all the information for this property, you can see it ranges from, for FHA loan, roughly $3,600, VA, $3,400, conventional could be as high as $3,857. So there's a big range depending on mortgage insurance, and we're going to break down in the next video what impacts that. Anyway, this is the first part. We're just giving you a basic overview of the components of a mortgage payment, which again are principal and interest, property tax, homeowners insurance, homeowners association, and monthly mortgage insurance if you're not putting 20% down. So that's a brief overview. Next, we're going to go into loan types and how they affect the loan amount, how they affect how much you need to put down, how they affect mortgage insurance. But this first lesson is just to give you a basic overview of the components of a mortgage payment.